It's January, so I just figured I'd make this video about like investing in stocks and cryptocurrency because it's something I've uh, been interested in for a very long time. It's 2021 now, and I think I had initially gotten interested in investing. Oh God, around I want to say as far back as like 2007, 2008, possibly earlier. Um, the biggest driving force behind my interest was my my father-in-law, Jeff. He was like always into it, and when I was like really young, 21, 22, um, he was always pushing that kind of stuff with me and my wife, or fiance at the time. I don't know. Obviously, he wanted us to have an interest in financial security and all that, so he really always pushed it. Um, so I have since then had very good years, and I've had bad years. Um, and honestly, like I've had such bad years. I've taken a number of years off, or I've ended up getting myself into like some sort of stalemate situation where an investment of mine had stagnated to a point where I felt like I was kind of trapped, and I couldn't touch that money because I didn't want to sell at a loss, and I just figured that investment would end up rebounding, and I really lost years and years of potential growth, just because I didn't really know exactly what to do or how to get out of that situation. I think as I'm getting older, I've actually kind of developed a routine that has pretty much not guaranteed, but like it's really gotten me more of a consistent return, and it's really an emphasis on growth and creation of funds as opposed to like more of a gambling mindset, which I think I had, you know, when I was younger. So it is January now, and one observation I've made over the years is that the December obviously just passed, and this isn't like 100% truth or 100%, the case with all stocks or currencies or, you know, investments, but my general observation is that there's a definite magnetism in the overall markets that I feel December is generally one of the weakest months. And I've done some reading over the years, and I think a lot of that comes down to individuals' own financial habits. I think a lot of people, and maybe wealthy people, um, I believe a lot of them end up selling in December, selling their losses, and I think a lot of this is due to tax reasons. Reasons I can't really explain because I'm not really a tax expert. I'm not an accountant or anything like that. I'm um, not even like a financial advisor or anything. I have a lot of interests myself, but stocks and cryptocurrencies have been, you know, one of my surefire interests over the last more than a decade. Um, But yeah, December I feel like is always a very, very weak month. And come January, things are still pretty weak. But I have always felt that January is um, a great time to start investing. Even December is a great time to start investing, but knowing that if you put money in, I feel like you're gonna hit a dip, and that can be kind of demoralizing. If you put money in and you have like an immediate dip because you can't really predict it, and stocks are always 50-50. Nothing's a surefire. When you're putting money into something, you really don't know what's going to happen, nor does anyone else, because a piece of news or legislation could come out of nowhere and destroy your investment. Like, literally destroy. I mean, if you've been investing long enough, we've all seen the overnight dip of 20% loss or more, 80% just gone, poof. So that can happen anytime to any stock or any currency. And it is a risk. So that's why you want to kind of diversify where you have your money. You want to kind of like compartmentalize your finances so that you are protected. You don't want to go all in on any particular stock. You don't want to go all in, in stocks or cryptocurrency in general. You want a savings account. You want credit lines. You want real estate. You just want to be safe and secure, because you need to know that your stock account could lose 80% of its value overnight for any reason, and you need to be okay with that. But anyway, so moving on to the market cycle that I was just talking about. January, I feel like, is a great time to get in, because over the years, I've kind of just through gut feeling and observation noticed that January, and I've actually hit this cycle myself by accident, a number of years ago, where I feel like January, February, March, April, May, June, July, if you were in a good company, if you have an investment in a good company, this might not be true if you're in, a company that's just not going anywhere. You could end up investing in a stock and it just flatlines for life. It's just not going anywhere. But if you're in a decent, solid company and you've done your research, I feel like these months are generally where you see some pretty good growth. So again, January, February, March, April, May, June, July. I don't know why. A lot of this growth, I think, is generally like basically it culminates from like quarterly financial reports. Maybe some companies do better around Christmas, and the news comes out a little later, and things go up. But what I really think, and I'm not an expert in this, but what I really think is that you get a lot of retail investors, not like big companies, but like just individuals. In my opinion, you're getting, it's tax return season, so people have a little extra cash on hand, and I think a lot of people put that extra cash into investments. And when you're adding your money to the overall market pool, I think that is a definite like magnetic force in the positive direction. So that is my opinion. So everything like that I'm talking about in this video is just pure observation over the last 12, 13, 14 years of periods of success and failure, and me personally trying to make sense of the market myself in the long term. So the last couple of years have been pretty good to me. So, you know, you know, I've basically had pretty good return January, February, March, April, May, June, July. Um, the end of June leading up to July 4th. Um, Again, this is pure observation, but I've seen some pretty crazy things happening leading to the July 4th holiday, depending on what day of the week that falls on. You know, if it's like a Friday, you know, is leading up to July 4th, like a weekend, I have seen some pretty crazy things happen, like, you know, those 20% gain days where, I don't know, things just kind of spiral out of control. And then basically what happens, and I don't know what the motivation behind this is, but I will notice a temporary dip. And what I suspect is that kids are getting out of school around the same time. And I don't know if people are pulling their money out. I mean, I think at that point people are pulling money for profit. They are also um, maybe pulling money for vacations over the summer. I don't know. But I always notice there's like a temporary dip, you know, like a huge run up before 4th of July, followed by like a dip, which is probably a combination of profit taking and vacations and, you know, maybe school related expenses for the coming year. I don't know. People graduating, graduation gifts. I don't know. But I do know that dip is typically pretty temporary because then over the summer, I've also observed that it's pretty strong running up to August. And this is both the case with cryptocurrencies such as Bitcoin, Ethereum. I've personally been pretty big into Chainlink lately, and I've noticed the trend in Chainlink. Last year I started investing in January, and it was growing, it was growing, it was growing. I personally got in around $1 something, and you know, it was growing and growing and growing. It peaked, I want to say, around $20 per link around August. And then from there, it actually began to fall, which brings me to like September, October, November, December. I think those are the most horrible months for investing. I personally don't really do much caring about the market at all, cryptocurrency or the stock market. I pretty much expect it to just fizzle and do nothing those months. I don't know why. It just seems to be the case every single year of ever, you know, that I've been doing this. And honestly, I love hunting. I got into it years ago. I can't say I'm a great hunter, but I love putting my time, effort, energy into hunting. Scouting, trail cam stuff, getting up early, going out, you know, enjoying the woods. So I do a lot of that, you know, in the fall, and you know, that takes my mind off, you know, the markets, and I don't really care because, you know, it's at that point, if you expect a win in any of those months, I think it's like just pure chance. Um, and you know, it's just horrible anyway. So I don't think those are great months to be investing. Any money you put in, you know, I believe are pretty much subject to loss. They will recover eventually, hopefully, if you're in a strong company. So, I mean, I'm not saying don't invest during those months, but I personally do not expect an immediate gain or consistent gain, you know, within those months. I would almost rather wait till December or January to start getting back into it. Just my personal opinion. So, you know, on that note, you know, we're talking about overall yearly market cycle. I want to discuss like a couple of different, I guess the way you would put it is techniques, investment techniques. I feel, just again, my observation, the majority of people that have no investing experience at all, this is what they do. They have $1,000 and they want to invest it, and obviously they have dreams of becoming like a millionaire. I mean, that's the way I thought 12 years ago, and I can honestly say I'm not anywhere close to being a millionaire. And anyone I've encountered along the years, friends, family, co-workers, I don't think they're anywhere close to becoming millionaires either. I think it's a pretty big chance to have $1,000 turn into $1 million, without putting much effort into it. It's definitely doable. I mean, I know it's doable. Hindsight is 2020, and if you go back and look at the markets, I'm sure you can pretty easily devise a way to turn 1,000 into $1 million based on historical performance. But the thing is, we do not know the future, and everything's 50-50, and nothing ever really goes our way. So I think if you're going to get into investing, you really need to get into consistent habits that are going to ensure maybe not the best return, but the safest and most consistent return, if that makes sense. So there's a couple of different ways that people invest, and that was one way. You take $1,000, open a brokerage account, I don't know, E-Trade, Robinhood, Coinbase for crypto. I don't know, there's like a million different ways to invest your money these days. It's great compared to when I first started. It was basically E-Trade and like maybe one other, TD Bank or something, I don't know. But anyway, so a lot of people, they get the bug because they saw the stock market go up like 2%, maybe one stock go up like 18%, and they're like, oh, that's great. I'm gonna take $1,000, and if that happens like 30 times, I'll be a millionaire. So they take their money and sign up for a brokerage. A lot of serious brokerages might take like weeks or months to actually get to the point where you can actually buy your stock. And if you don't get bored with the process before it happens, and you actually get there, your $1,000 you transfer over, then you're waiting for that to be accepted by the brokerage. So that's another few days or weeks or whatever, and hopefully you don't get bored by then with the idea, because a lot of people do. And then they at that point they kind of throw the dart at a board and they buy their stock. And then undoubtedly, hours or days later, that stock drops for some reason, because that's what stocks do. And your 1,000 is now 800 or 700, and you panic and you sell, and now you have 30% less money than you had when you started. And yeah. That's not really how to do it. That's gambling, in my opinion. Happens every time. I have a friend that just got back into Chainlink, and he dropped a large sum in, and obviously it immediately dropped within hours, and he's smart enough to know that means nothing, so obviously he's just going to stick with it. But to me, that is not worth it. To me, that's lump sum investing, and that's not really going to facilitate growth. That's a little akin to going to the casino, playing roulette. You're going to have to wait at least a year to see a good return on that, I think. Possibly 2 years. At the end of 5 years, if you selected a good, solid company, I believe you will probably at that point see a pretty solid return. Maybe 10 times over. Potentially. Your 1,000 might be 10,000. I think that's pretty optimistic. But it's not really the way I like to do things these days, because there's a lot of uncertainty involved, and I don't think it's the best policy for growing like an account. So there's something called dollar cost averaging, and basically, rather than trying to time the market, buy low, sell high, you don't know what high is. People look back in charts and like, oh yeah, well that's the high point, that's the low point, that's the high point, that's the low point. When you're here and now, you don't know. The market could be up, and then tomorrow you're gonna buy and then or sell or whatever, and then 2 days later it's even higher, so you missed profit. It could be down. You just don't know. You don't know what it's gonna do. So dollar cost averaging really encourages breaking your investment purchases over days, weeks, months, whatever it may be. Me personally, I've pretty much taken to purchasing weekly for the most part. Whatever you can do, 25, 20 bucks, 35, 50 bucks, 75 bucks a week, whatever you can afford. And I choose my target, whether it be a stock or Bitcoin or Chainlink. And basically, from that point on, if I'm comfortable with the overall prospect of growth, say I think this prospect is going to be worth infinitely more, in 2 to 5 years, that's good enough to me. I don't really care what it's going to do weekly, daily, or whatever, for the most part, other than my overall market cycle, because I don't want to be wasteful. So I do want to get in when it's on an upward swing as much as possible. And I do obviously want to potentially sell and have some breathing room when I think it's peaked for a while. I do want to do that, but at the same time, I don't want to put $1,000 in and all of a sudden now it's worth 700, and then now it's like, oh, now how long is it going to take to go back up? If I invest $1,000, I sure as hell want $2,000 on reserve. So if it drops to 700, I put in 2,000 and double up on it, and then now when it goes up, I'm ahead. But if I don't have that money on reserve, I don't want to do that. I would recommend putting in like 100 and then waiting a week or two. Now, if your 100 turns into 70, now put in 200. It's a little like roulette in the casino, in that regards. I have similar tendencies in the casino to double down on a bet. But so it's still kind of a bet, but your dollar cost averaging, so you're spreading out your risk over a number of days and weeks and months rather than just funneling it all to a single day. One of the biggest breakthroughs that I've seen in recent years, when I first started investing years and years and years ago, all the way back in 2007, 2008, whatever it was, they didn't really make it easy, and unless you got an advisor, that managed an account for you, which I highly suggest, by the way. Um, I do encourage people to play with the market and indulge themselves, um, and play, but it is really just that. It's play, it's risk. Um, you might not make any money. You could go completely broke doing it. I do always recommend getting a financial advisor. Um, I don't know, maybe through like New York Life or whatever, and have them tip into your paycheck every week and take money. Well, a lot of companies obviously offer that, through Roth IRA, 401k, or whatever. And that's really a form of dollar cost averaging where you're purchasing shares weekly, managed by, a financial advisor. And that's where your retirement funds come from. And I highly recommend that being your base of financial success, because to this day, I mean, I'm pretty sure, at least for me, that's one of my most successful, consistent accounts. Um, but anyway, um, you want to mimic that growth, by doing what they do. So you don't call your financial advisor or your company, that manages your 401k, and you don't tell them, oh hey, I have like $5,000 that I just got. Here, I'm gonna give this to you. You don't do that. They're growing the money for you. They're basically like, you barely notice it because they might take out like 25, $50 a week, and you don't even notice it. But then the next thing you know, you're checking it a couple of years down the line, and you got like $10,000 that you didn't even know you had it, and it's like you don't even notice. So when you're doing your own stock and crypto investing, I highly recommend basically mimicking what they do. So what I was gonna get onto is, platforms like E-Trade and other platforms, TD Bank, whatever. I don't really know all of them because I only use what I use, but they didn't make it easy to do that. Um, I mean, you would transfer money, 25, $50 a week, and it sits as cash, and it's not really working for you. You're not purchasing stock. So you would have to wait until you had enough to purchase a stock, and then purchase that stock when you could. Timing wasn't always perfect, and basically then you had to worry about fees, $7-8 a trade. So that dips into your profit. So if you're just buying a single share, you're buying $100 worth, and you pay a $7-8 fee, you're automatically at a 7 to 8% loss. And the stock market, I mean, what do they say the average growth is? 8 to 13% or something like that. You want to strive for more, because you don't want to be average, because you can't really make things work off average. But moving on, a lot of these Android and iPhone apps have made things. It's really changed the game, because two in particular, Coinbase. That's an app for Android and iPhone, and that allows you to buy cryptocurrencies such as Bitcoin, Ethereum, Chainlink, number of other cryptocurrencies, and they charge a fee. That fee, I think, is determined based on your purchase amount, total what you're putting in. But the biggest game changer is they allow the purchase of fractional cryptocurrencies. And likewise, Cash App, which I think a lot of people are probably aware of for personal usage, obviously also on Android and iPhone, they allow the purchase of fractional shares. Maybe limited to some pretty major companies, because I think there's a certain way they're able to do that. But if Apple is running, I don't know, 180, whatever it is, I don't know right now because I'm not looking it up, but say it's 180 a share, you can buy $25 worth of Apple, and they will sell you fractional shares. And to me, that's a huge game changer, because when you get paid on Thursday or Friday, you just open your app, click on the stock, and just automatically $25, put it into Apple. Do that every single week. And if you do that for like half a year, I recommend doing it from January to August. And then August, you have to make some decisions, whether you're going to stay in and ride out the rough months. I personally like to take out all or some of my my shares and convert them to cash for those months. But I mean, you got to make your own decision. But you're gonna do pretty well, and if you do that every single year, for the next couple of decades, that it's great. You're gonna start seeing like the type of money you see in your Roth IRA and 401k if you're consistent about it. The problem is you can't forget. You can't get bored. You have to be consistent. It has to be a part of your routine. When you get your check deposited, you got to put in whatever you committed to put in, 25, 30, 50 bucks. Do it every week. And, if you're in a solid company or crypto, January, February, March, April, May, June, July, you're going to get motivated, because you're going to be, in my opinion, seeing your money going up, and it's compounding and it's stacking on top of each other, and it's just going to be, it's adding a certain level of chaos, but in a good way. So yeah, dollar cost averaging, that has, for me, been pretty much the biggest game changer over the last 12, 13 years I've been doing this, is participating in that method of investing, as opposed to the lump sum. You get $50,000 out of nowhere. Do not put that in the stock market. It will be gone. I can pretty much promise you that. Your goal is to use dollar cost averaging to create $50,000. You don't want to have lump sum investing lose that $50,000. You just don't want to do it. It's going to be gone. The other thing about dollar cost averaging is, if you're buying weekly, your human instinct eventually, whether you're quick to catch on to things or slower, at some point you're gonna start noticing your own trends. And human instinct is a wonderful thing. Your gut. Computers are great, mathematics are great, algorithms are great, but it's missing something. It's missing like its soul. Like you can't predict anything. But you know what? The human instinct in the gut is it's a pretty crazy thing. What your gut starts picking up on when you start repeating the same process over and over and over for days, weeks, months, and years. It's almost like you start noticing these like instinctual trends. And for me, doing this for so many years, I kind of noticed it's almost like you start associating a season with success. For me, it was like I didn't notice January, February, March, April, May, June, July were spectacular months for investing. And again, maybe people's experiences will be different depending on the companies they choose. Maybe it's the specific companies and the specific cryptocurrencies I choose that those happen to be the good months. Maybe that's just my experience. So obviously I'm going to be posting this video on YouTube, so I would love to hear people's like feedback and experience, with investing in relation to the market cycle, and what you guys think. But I think for me, that's something I noticed, and it's because I think I noticed years ago investing, the lump sum style, and like just on a coincidence, Christmas was coming up, and I'm strapped for cash, and it's like I don't want to always be that way. I want to get ahead in life. So, around that time, I'm like thinking, oh man, if I could just like come up with a little extra money, I'll put it into the stock market, and maybe next year it'll be better. This is in November and December, and of course, per usual, I'm seeing immediate losses and getting, demoralized. And then, January, we cleared January 1st, and, Christmas is over, motivation, starts ticking again in the economy. People are just going back to work and doing their thing. And then it's like, I'm kind of like over the whole investing thing by then because, life's getting back to normal. And like February, March, I'm like, oh, wow, that really started to pay off. And then, I don't know anything about the cycle. So, I get a little extra money around July, and then like things are like pretty good. And then all of a sudden, like, what the heck is happening? September, October, November. It's like I'm getting demoralized because all my investments are sinking. So it's just something I noticed. And again, it could be, just the particular field of companies that I invest in. Maybe it's just their individual cycle. But I mean, I've noticed it, not just in that, but also like in Chainlink. Like that went from like $1 a link, like I said, all the way up to like 20 by August, and then it kind of dropped by half. So if you bought it at like 18 to 20 in August, you would have lost all your money because that's down to like 10. Well, it was down to 10. A good portion of September, October, November, December. So if you put in like $10,000 into Link in August, you would have thought that was a horrible investment because your money would have been at right around 5,000 to 6,000 by then. You would have lost $4,000 or $5,000. But now if you had put in 10,000 in January, you're looking at like 20,000 by August. Actually, no, more than that. 10,000 at $1. You're looking at. You would have been looking at. I got to do this math real quick. 10,000 a $1. Yeah, you would have been looking at $200,000. Knew my math was off on that. Just had to make sure my gut was correct. Didn't want to blurt out some crazy amount of money. But, so yeah, that's the difference. Market cycle. One person thinks Link is horrible because they lost half. Difference between getting in August and getting in January. And, again, that's been kind of my experience. A lot, it's like a magnetic force. So it was January 8th, and yeah, I'm buying what I buy. Not really getting into that right now because that's not the purpose of this video, but if you subscribe, I obviously might be doing some more videos and talking about more things that end up exciting me. This channel doesn't really have too much direction. It's a little more of a personal, just like a outlet for boredom. So when something excites me, I usually like to talk about it. But yeah, if you subscribe, I definitely. I mean, if you guys want me to be talking a lot more about stocks, I definitely will. Or if anyone has any questions, shoot me a message, and I can always address something. Create more content. But yeah, so basically, just to summarize everything, in this video, I talked about market cycle. What I've noticed is a good time of year to start investing, and kind of like going into the reasons why I think that might be the case. So January, February, March, April, May, June, July, great months to run up the market. August, usually has a little mini peak, and Honestly, I'm not a huge fan of September, October, November, December. I'm pretty sure there's a phrase somewhere that calls October Red October in terms of the stock market, but as bad as October is, I personally think December is the worst month. So if you're investing August, September, October, November, I think by December you're going to have a pretty considerable loss. So be smart about it. Buy as those people are losing their money. Everyone else. When they're selling and you're going to be getting good prices in December. I personally like to start in January because I think January prices are still no better than December prices, but at that point, we're going to start seeing a run up, and that's, you want to like doing what you're doing, and obviously part of that is seeing green, success, not red. And then obviously we talked about dollar cost averaging versus lump sum. I prefer to split an investment weekly or monthly versus just putting a whole bunch of money randomly into some random stock you picked off a dartboard, or a friend told you to buy. If a friend's telling you to buy something, it's probably too late. That's my opinion on that. Or not. But if you choose to get into it, use dollar cost averaging to ease your way into the investment. Don't go putting all your life savings down on something only to see half your money disappear. Break that into 52, like $10,000 divided by 52, and start putting it in weekly. And if you don't like what you're seeing, stop and figure something else out. Or better yet, save that $10,000 and use dollar cost averaging to create another $10,000, using your paycheck every week. And then, the only other thing we talked about was how great investing and accessible it is these days compared to 12, 13 years ago. You don't even have to sign up for E-Trade. You don't even have to sign up with TD Bank or whoever else is, doing these stock brokerage things. You can invest right on Cash App. Download Cash App, go to the investing portion, pick your stock. They even do Bitcoin now. And just be sure to buy it weekly, $25 a week is really all it takes. $30 a week, 50, whatever you can afford. And Coinbase, same thing. You download Coinbase, it gives you access to like a whole market of cryptocurrencies. And just same thing. You can just buy weekly, $25 a week, $50 a week, $75 a week, whatever you can afford. And these apps are pretty revolutionary, I would say, because not only did it make investing easier for you, but it makes it easier for everyone. And by making it easy for everyone, that actually adds money to the pool. So with more people investing, there's more money in the market, which is what drives the value of stocks up. Because, obviously the value of a company is just how much money everyone has either put into it or pulled out of it. So, if a lot of people are putting money into a stock, it's driving the price up. Now, if they're pulling their money out, it's obviously, ruining the effective market cap, and that's what drives the value of a share down. So the more people that invest and get involved in investing in cryptocurrencies, the more people putting their money in, that is what's driving the cost of the value of the share or the currency, which is what makes you money. If you were one of the first people to get into Bitcoin, obviously, a handful of people are in it, so you buy it, you could have got Bitcoin for dollars, back in the day. It's honestly recently it's hovering right around $40,000 now, because now you got the whole world looking at it and the whole world putting their money in it, and that's where the value comes from. So the more people that have the ability to purchase Bitcoin, that's what's driving the value up. You know, it's when I was interested in Bitcoin years ago. I had no idea how to purchase it. I honestly was looking at buying like 1320. It's like I didn't even think anything of it, but I couldn't figure it out. It was complicated. It was technological. You had these wallets. Couldn't figure it out. I think a friend of mine had bought several of them, and he was mining them, and he was pumping them out pretty quick, and I just was like, oh, you know, blah blah blah. But you know, now it's less complicated. You know, Coinbase, you know, allows the purchase of it. Now Cash App allows the purchase of it. Now they have Bitcoin ATMs, I've heard. So the more people that have access to it as it opens up, that's what's driving the value up. So yeah, that's pretty much how it is. So if you do not have a stock account, you can start today. Just download Cash App. This isn't a paid placement or anything. This is just me talking. By the way, I'm not associated. I'm not a financial advisor, but you know, this is just my advice to friends and family. You know, you can go and download these apps today, and $25 a week. Cash App, Coinbase, and I'm sure there are other apps. I've heard Robinhood, possibly. I don't know how intuitive that platform is, but yeah, that's it. And yeah, maybe I'll be posting more videos on this topic because it's January, and yeah, this might be more of an interesting topic for me as my playing around in the next few months progresses. So.